I'm going to talk about our shocking new way to help buyers skip the bidding war altogether and get ratified immediately.
This is going to be awesome.
Hey, everybody.
Sean and Kelly here, Price and Price Group of Samson Properties, and welcome back, Kelly. You missed last week.
Thank you.
Yes.
Well, we both missed last week.
No, I did it because I'm dedicated.
Please.
Yes.
Okay.
All right, so we are really excited about this. Start this off.
So excited.
This is the originator of this idea that we were going to be talking about. She came up with
Yes.
it out of her own brain space.
Out of my own brain space. And then there was like a whole lot of like, you need to just say it. You need to just say it. Like me say it to him. I have a lot of good ideas and he shoots them down all the time. Shockingly.
Because they're not good ideas.
Well, I mean, shockingly, as soon as I said this to you.
That was brilliant.
You said.
We have
yes.
to name it.
And then you named it.
Yep.
And I loved your name. Okay, so let's just say again. This is for buyers who are either averse to a bidding war because that's the market that we're in right now, or they have already been through many bidding wars and they have not gotten under contract. They've lost it, and it's like, we are done. We love this place. What is it going to take to get it? And I do want to say, for our listings, we have agents all the time, and for our buyers, we contact agents all the time asking, what does your seller want, right?
Right.
And we're like, just put in your highest and best, and you know, rah rah rah. We might say, you know, an early settlement date is important, or the PSO is super important, right? We're gonna hit on
it's all those terms, right? It's everything, not just the sales price.
But what we really want to like get out of someone, and what they really want to get out of us, is what will it take to get my buyer this house, right? This isn't for everybody. And later we're going to go into who this is not for, right? This is not for everyone.
And if you're a seller, don't tune out, because for two reasons. Number one, you want to know what buyers may be doing, because I think this is going to catch on. But number two, this helps you as the seller. So we actually represent the seller in this first one that we've done.
Yes.
And it's been phenomenal for the seller. It's helped them reach their goals quickly, lay out exactly what they want, what they will take. And it's just phenomenal. So we're going to dive into the details on what this is, how this works, and go from there.
So what it is we call it
the sign and settle. It's a reverse offer.
Yes. So what this looks like for our seller, right? Because that's who we're representing in this. And why did she want to do it? Well, they just got under contract with the property they're purchasing, right? So it was like we were waiting to list her house until she got this, because they had been in bidding wars up in Pennsylvania, lost out multiple times. They finally got their home under contract.
Yep.
And it's like, okay, now that that's there, we've got to list our house and go, right? It's like, go team, go.
Yep.
So there is that factor of, I need to have this happen. That is one of the things that makes this really, really work. Okay.
Yeah, and for this seller, for example, it's something where she and her family have to pack up the new baby, and they have to pack up the dogs every time they have to leave. So it's in their interest to get the property under contract as soon as possible.
Yes.
But they don't want to do it and potentially miss out on a multi-offer situation that could get them, you know, a large over asking price.
Okay, so what does it take on the seller's agent end, right? You have to know the area. You have to understand the comps. You have to constantly be looking at that area and the comps to see what just sold, what's on the market,
what's the competition.
If something's under contract, you've got to get on the phone with those agents, glean as much as you possibly can about the pricing and everything, right? Which we already know that we have to price it perfectly. When listings go on. But okay, so we haven't actually said what this is.
We have not. So what is a reverse offer?
So a reverse offer is where, instead of the seller waiting for buyers to submit offers, thereby usually here creating a bidding war, and where they have all of these to look at and compare.
And some may not hit the ideal terms.
May not hit everything,
every
right?
Term,
there might be give and take on all of it. This is a normal way of how real estate offers and contracts work. This is how it works, right? The reverse offer is where instead the seller puts together it's the same contract. The sales contract is what the offer is until all parties have signed and it's ratified. Then what was an offer turns into the contract. It's the same paperwork. So the reverse offer is where the seller fills out everything that they want. They fill out the sale. I would take the sales price. I would take this kind of financing. I would take
This
this
earnest
kind
money.
of deposit.
Yep.
This is the date I want it to settle. These are the terms. This is the settlement company I want. Do I need a seller rent back, right? Do I have to stay in here longer? So everything that would make the seller say, done and done.
I will skip the bidding war and I will take this offer.
Yes.
Yep.
So all the buyer has to do is go through the terms and think, I would pay this.
Mm-hmm.
I can handle this deposit.
Mm-hmm.
This settlement date works for me.
Yep.
I'm okay with it. All the terms, right?
Mm-hmm.
And they go through this with their agent. And the agent, what they do is they say, okay, then sign here. That buyer's agent then sends us that reverse offer signed by the buyer. And we have language where immediately upon receipt of an unchanged
Yep.
sign and settle reverse offer, has to be unchanged, the first one, we guarantee the seller will sign it. That makes it a ratified sales contract. And for this one, we actually, when we do this is our first time, right? This
Yep.
has never been done before, right?
Yep.
So what we wanted to make sure that we did was one thing, you said home inspection. So
Right.
talk about that.
So we have one of the terms, of course, for the seller is they don't want a home inspection. And it's not that they're afraid of the home inspection, it's that they don't want the buyer to have that contingency to be able to void the contract, because a home inspection is a broad, pretty much just, if you get cold feet, you can void based on a home
We
inspection.
just had another one void today because it was a first time home buyer
Right.
who got cold feet after a home inspection.
So they paid for the inspection and they voided. So with the seller on this, when the seller, in order to represent to the buyer that they don't want, they're not afraid of an inspection, the seller, we actually did an 84-page inspection on the property, which will be provided to the buyer.
Yeah. So Sean and I paid for the inspection.
Yep, that's right.
And the language in the listing says, on top of upon the first received buyer signed unchanged reverse offer that we received, the seller will immediately ratify that, and we will provide this 84-page, on this property it was 84-page home inspection report.
That's right. That's right. Which goes over all the big systems and everything in the property. So that gives the seller protection against, because they're disclosing. Right. That gives the buyer protection because they had a third-party inspector. This is not an inspector that works for us. It's just one that we've hired to come in and do it. This third-party inspector is giving them the information on the property, so they are protected.
Right.
And they're submitting this offer that the seller will sign immediately.
Yes, and of course we already had in the multiple listing service, you have documents that only agents have access to, right? And we've provided the upgrades list, like this is the age of the roof. We've provided a receipt so for proof of this. And so the buyer's agents have a lot of, all the information that we could possibly get.
That's right.
So I think we've created the case of or we've outlined at least what this is. So I do think it's important to talk about who this is not for.
So
right?
before we do that, let's lay out a real world scenario.
Okay.
We'll change the numbers so that everybody stays has their privacy protected. But so let's say a property is going on the market for $1 million. And let's say that we have seen properties in that neighborhood recently that have gone on the market for $1 million and have bid up to, let's say, 1.1 million. So $100,000 over asking, which is not uncommon right now.
Right.
So that's $100,000 delta in a bidding war. Let's say that the seller, we sit down with the seller and we propose this to him, and I say to the seller, I say, so what number would you walk away with and what terms? And they're like, I know I might possibly get 1.1, but if somebody came in and gave me $1,075,000, I would take it. $75,000 over ask, I would skip the bidding war, I'd be happy.
And this is seller dependent, right?
Yeah.
It depends on how much equity they have, how many, so many things.
So many things, right? Yeah. So the seller would say, I'm willing to take a $25,000 potential haircut to get a guarantee of this much money. So
and I get all the other terms I want.
Get all the terms I want.
Date,
That's
everything.
right. So we put this offer together for the seller, no inspections, no all this stuff.
Right.
We get the inspection done, so we have that to provide to the buyer. So then when the property goes on the market and the buyer's agents, if the buyer's agents are doing their due diligence, they're going to see, hey, this property went under $1 million. We need to advise you to be ready to pay 1.1 because of the bidding wars and so on and so forth. Wait a minute. there's a sign and settle agreement here. You could take this property right
Yeah.
now for 1.075, save yourself $25,000, skip the bidding war and
Yes.
get it right now.
Yes.
And I have buyers lined up right now that would take that in a heartbeat.
Yes.
And so what that ends up doing is the seller gets what they want.
Mm-hmm.
And they don't have to deal with all the extra
Yes.
hassles and everything. The buyer gets a property ratified. They get what they want.
And let me talk about, let me hit this real quick.
Okay.
About the buyer being willing to do this. So in this market, a lot of buyers are waiving their home inspection contingencies. Yep. So in order to do that, but yet still feel safe, they're having pre-offer inspections.
Yep.
Every time they do that, they're having to pay
Yep.
a few $100s, right?
Yep.
So that is also costly. It's not just the emotional upset of having to go into another bidding war and guess and all that. It's also that expense, right?
That's right. And so this is win-win for the buyer and the seller. And it's, if I think now's a good time to go into who it's not for, like, as far as, you want to start with the buyer or the seller?
Let's start with the seller.
Okay.
Right?
Okay.
The seller, we're very familiar with the seller, right? We sold them this property. So we're familiar with the property. We're familiar. So the agent really, really matters. But it's not for the seller who just wants to get the absolute most they can get from their property.
Yep.
Not that they're willing to take a cut, but you've talked about the psychology of the seller, right? So tell me that.
We have worked with a lot of sellers that will put them on the market. I'll have this conversation with them before we even start the process. And let's say they get an offer day one, like we haven't even made it through the first weekend. Let's say that they're priced at $1 million. And they get an offer for $1,050,000 with no contingencies, and it comes in on day one. The first thought that seller is going to have is, well, if I got this on day one, what am I going to get on day three? And so they will turn down a really, really good offer to, what is it? A three in the bush is worse than one in the hand, or whatever it is. So they, and
I love you when you do that.
Yeah, a lot of times the sellers will miss out on that because they'll turn down a really good offer, and then they won't get what they're thinking, and then they mess up the situation.
And that's happened a few times,
numerous
right?
times, yeah.
And then their property is there longer, and the longer it's there, the more buyers are thinking, oh wait, what's wrong? And so they back off what they would be willing to do.
Yeah. So in a seller's mind, if they get an offer really, really quickly and it's a strong offer, the natural instinct of fear of missing out. FOMO.
It is FOMO.
Yeah, they immediately think, oh, I can't take this because there's better coming. So if you have that strong of an emotion, because we have an addendum in the agreement with the seller.
This is another thing where this is where one of the areas where I think, because we've only just come up with this, and so far from the response, I think it might take hold and be a thing, but it can be misused. And I think if agents are not doing, this is one of the things, if they don't do that, then what if the seller has that and they're like, no, second thought, we're not going to ratify
Let's
this?
counter them, and then there starts bad blood, and then
that would be a huge no. Okay, so
Yeah.
what did we make sure we do so that our seller knows that, like, hey, we're telling them if you get this,
So
you will sign it.
First thing is, I had this conversation and I said, you will feel this way as soon as you get that offer in hand. You are going to feel this way, and I need to know, are you okay signing this? And they agreed. Then we put it in writing that they would commit. They committed that if they received one of these,
on our listing agreement.
And if they receive that, on the listing agreement said, if they receive an offer or if they receive multiple of these, we cannot start a bidding war against them. We have it in a language that the first one that came in that was unchanged is the one that they will ratify. Because the worst thing that's going to happen in a seller's mind is if they get this offer and they have 3 or 4 more of them, and they're like, okay, let's start countering and trying to get it up. And that is, again, it's bad blood, it's bad form, it's something that is not going to work well.
It devalues the whole idea of this.
And
right?
all of those buyers are going to walk away because now they're like, well, we'll just come in for the bidding war, and they'll come in with escalation clauses, and exactly.
Okay.
So.
But luckily, I think it was easier for you to have that conversation with this particular seller because they had just done all the bidding war. So talk to me about the buyer.
So the buyer's side,
and you were able to ask this question.
Okay. So this seller had put in. This is the third property they'd put offers in on. They had been against 3 offers on the first time, 4 offers on the second time. They both lost. They were against, I think it was 7 offers.
Oh yeah, 6 others plus
Yeah.
theirs. Yes, 7.
On this property, and they got it. The first question they asked was, "Do you think we overpaid?" And that's the buyer's mindset. The buyer is always, always, always. We have another buyer that just won a bidding war, and when I told him they won, he immediately went into freak out mode because he was like, "Did I overpay?" So
Yeah.
it's
And we
a
were
natural.
not this seller that we are representing. We did not represent them on the buy side
That's
because
right.
they're in a state we're not licensed in.
Yeah, yeah, and so the buyers have that same
Yes.
that same mindset because so the buyer, this is not for the buyer who's going to be afraid that if they ratify this sign and settle agreement, they're going to immediately think, "Oh my God, did I overpay?"
Yeah.
So,
or if they think I'm not going to do this, right? They
Mhm.
no, I don't want that settlement date. That's fine. That's fine. It's not for them.
Yeah.
They can still bid. They can
Mhm.
still or offer, right?
Yeah.
They can still make offers. The feedback we've gotten from agents, we've heard, wow, I've never heard of this before, which
Mhm.
we know why. And I even showed this to a lender I work with, and they thought this was a really great
Yep.
idea. And please send that over. And I can't wait to see it.
Yeah.
And we're scheduling showings now. And if
Yeah.
it looks good, we're gonna get it in. We were able to put the language forward facing to the public, you the
Mhm.
buyers, by saying, "Hi, do you want it?" Or not hi.
Yeah.
Hi.
Hey, neighbor.
But do you want to skip the bidding war and just get immediately under contract? Ask your agent for our sign and settle.
Yeah.
Blah blah blah. So it has, and we've had that. I've had people on Marketplace reach out to me like, "Hey, what is this?"
Mhm.
So
Yeah.
it's so far being well received,
Yeah.
except by Bright, right?
Yeah, yeah. So our multiple listing service, because of the whole you can't share agent commissions. Well, part of the term of the contract is the buyer agent commission, and in this situation, the seller is offering a buyer agent commission.
Yeah.
So that's a part of the contract, and the MLS said you cannot have that in the MLS
Yeah,
because
they're like,
of that.
we're removing this document so
Yep.
the agents can't see it because you used the C word. They didn't say that.
Yeah.
I call it, it's like we're not allowed to use the C word
Yep.
anywhere.
Yep.
So it's not there. That's the only reason. It's just not right there for all the
Yeah.
agents to see. They actually have to call us and say, "Hey, will you send that over to us?" Yes, we'll send it over, because it's a term of the contract. I
Yep.
think this is a load of horse shit that you can't even.
It's okay. It's a little horseshit. Sure, we both
It's a
broke
load
it.
of
Yeah.
horseshit. I mean, if we're going to negotiate the price and we're going to talk about the
That's a
down
whole other
payment, we're
conversation.
gonna, like,
Don't tangent. Come on back in. Okay.
I feel happy.
So how is this working so far? Okay, well, we went on the market yesterday.
Yes.
The sellers have very limited showing capabilities, so
Because
we
they
had
have there's
a baby and they work from
situation,
home
right?
and
So
everything.
there's so many things.
Yeah. So we had 2 showings yesterday because that's the only slots we had. We have 3 or 4 showings tonight plus an open house. So far, we have sent out 2 of these sign and settle agreements that are in buyers' hands right now that are coming to see the property tonight. So there's a strong chance that one of them are going to offer this thing and get it ratified tonight.
And because this came from my brain, there's also a chance that
it could blow up.
It's a piece of shit. I mean, usually if I hit really, really well.
Yeah.
But there are so many times I don't hit.
Yeah, so we'll give you a follow-up and see how this goes.
Is this another shit child from Kelly's brain or not?
So I think it's great. Do you think we should summarize? Or do you think we've done enough summarizing? In summary, oh God, you're going to summarize?
Kelly
Get comfortable.
And we're going to see if it pans out.
Yeah, Kelly had a great idea. Sellers can get what they want on a transaction. Buyers may be able to skip the bidding war and pay a fair price for a property. And we'll see how this goes. All right.
To be continued.
Yeah, that's right. Okay, if you guys have any questions about this, or if you know anybody who's looking to buy, sell, or invest in real estate, have them reach out to us. The number is 703-783-2143. And you can reach us on social media as well.
Yeah. We
prefer you call us or text us. We're not on social media, so we
really
miss
dumb about all that.
And we miss all the like DMs. Like I get all kinds of messages, and I'm like,
hey,
that was last month.
Said something and,
yeah.
I'm sorry.
We don't even know where to go to reply.
But wait. To our
There's
credit,
more.
It's because we're so good at doing like realtor things that we're really crappy at doing
social media. That's right.
But those who are great at it, I mean, they're really awesome.
That's right.
I'm very impressed.
All right, so let us know if you have any questions. Shoot us a message. If you want us to have any questions that you would like us to answer in a video, like you see an article, we love breaking down articles. So send us any articles that you see.
We like,
yeah. All right. All right. We'll see you guys on the next video.
Bye. Hey everybody, it's time for this week's market snapshot.
Wow.
I'm getting so
That's
good at
awesome.
this. Everything that's going on in the Northern Virginia real estate market in the last 7 days in
under 5 minutes.
Yes.
Yep, here we go.
All right, let's look at the top graph. That squiggly black line, that's the buyer activity. That's how many buyers have actually put in offers and gotten them under contract.
That is right. How many properties went under contract?
The last 7 days.
Okay.
The seller activity.
What's this? What color? What color
I
is
figure
this?
you're mean enough that you're not going to cut that in.
I'm not cutting it out.
The squiggly teal line underneath, that's the seller activity. That's how many homes have come on the market and been listed for sale in the last 7 days.
That's right.
Northern Virginia.
That's right. Okay, Northern Virginia, specifically Fairfax County. So all of these market reports that we do are Fairfax County. We're using lead measures, and I say this every few times because I want everybody to understand. When you're reading the news and you're hearing about how the market's crashing and all that, you need to know that a lot of that's pulled from sold data. A lot of it's inaccurate. But when you're looking at sold data, that information is actually what happened in the market 45 to 60 days prior. This is what happened in the last 7 days. So you can take this information, you can go out into the market and use that to know how to write your offers. Sellers, what do you expect?
It's kind of like when your BFF is texting you.
Yeah.
Like, they wouldn't text like this. When they're texting you and they're like, oh my God, did you know that like Lidl is having a sale on their most amazing donuts right now? You know, it's like a dozen for $1. It's like that.
Yeah,
and
versus if they wrote you a letter, they put it on their car seat, they forgot to mail it for a week, then they put it in the mail, and then they got lost in the mail.
And they mailed it from your mom's house, which always takes like 2 weeks
months.
longer.
So you get the letter a month later, and you get there and like, what the hell? Where's the cell? Good analogy. Okay. All right. So I was going to go somewhere with this. So this is really important because with all the news that's out there with the layoffs and what's happening, when they're pulling data in the media, they're pulling all the old data. You need to know what's actually happening, because if we're going to start seeing the market trending, this is where we're going to see it. If we see it started to trend another direction, this is it. So what is going on?
Yes. All
right. So you can see that the black line, like Kelly said, is the buyer activity, and that has been on a steady increase since the beginning of the year.
Yeah.
We did flatten out a little bit here, and this is when all of the news started coming out about the layoffs and everything, and so buyers got a little hesitant.
A little nervous,
But you can see, and we kind of said this, we said they're going to calm down for about a few weeks, maybe a month, and they're going to jump back in, and then here they go. Yeah. Inventory has been steadily increasing,
which we always expect in the spring. Right?
Yeah. We are a little bit higher on inventory this year than we were last year. So last year, but we need that inventory because it keeps it more of a neutral market.
Yeah, that's really fantastic.
Yeah. So if you go down to what this means, like actually in the market, if you look at this gray line right here, that is your normal market. Anything above the gray line is seller, anything below is buyer market. So we're always lately in a seller's market, but you can see it's a little bit less strength of a seller's market because we're here versus where it was last year. But it is
not very much.
No, and we're seeing the multiple offers happening. We're seeing if the property is in good condition and it's priced appropriately, that we're seeing the multiple offers, a lot of traffic, and we're seeing that traffic starting to pick up.
And I want to hit on something real quick because I think I have time. Let's talk. I know we're talking about buyer's market, seller's market. This is the sales, right? Real estate sales. But I do want to mention what's going on in the rental market. I think that's important to just hit on a little bit, specifically in our area, and with the nerves about layoffs and things like that. We have people being called back to the office from the outer counties.
Yeah.
But they bought in the pandemic when the rates were so low, and they bought these pretty much the houses of their dreams, right? And they're not quite willing and ready, understandably so, to say, hey, let's just sell it and then go buy closer.
Yeah.
So anyone who's thinking about renewing a lease or getting into a lease or something, I just want it on your radar that the lease market here in our area is skyrocketing.
Very tight, very competitive.
Where it's getting really hard to find the good places, the good safe places, especially if you have children that you need to worry about schools with. Pets, oh my gosh, we can speak to that. But the rates are really, really getting high. So just please look. Don't use it as an automatic fallback in your mind. look and see what you're dealing with so that you can really compare and figure out what's right
Yeah.
for you.
It may be smarter to just buy yourself a small condo versus paying the rent, just because the rental market, nobody wants to put that money out in the competition of it.
It may at least get in touch with us, somebody who can show you this is what it would look like and these are your options, buying or leasing or everything. I just want to say that.
100%. We are seeing about 20% of the buyers in the market right now in Northern Virginia are getting their inspection contingencies. That number is going down each week. It was at about 35% about 4 weeks ago. So the contingencies are getting more competitive, and those ones that got the contingency are typically properties that have been on the market for over 14 days. We're seeing the same thing with the finance contingency and appraisal contingencies. They're higher in acceptance than they were last year, but they are quickly diminishing. So buyers, you've got to be ready to compete. Get your pre-offer full approval, your POFA.
Yes.
Get your pre-offer inspections done. Be prepared. Have your team ready so you can protect yourself, but in submitting strong offers.
If you want to know what it means to have your team ready and being prepared for all of this, get in touch. And he's got a handy dandy, what's that thing called?
PowerPoint?
Yes. That goes through all of it with you. Because really, if you're in a situation where this is the house we've been waiting to see, is the perfect place, like neighborhood, whatever. Have your team ready so that your agent can say, yeah, I've got a home inspector who can go with us even at your showing, right? If it's that meaningful to you and it's that much of a win, take them there on your showing.
Yeah, and you bring up a good point. So for you're welcome, Kelly. For the buyer, our buyer consultation, ideally after you do this, you would work with us, but you don't have to. You take the information, run with whatever you want to.
We realize my personality is for everyone. Maybe Sean's is. You could just work with him.
but we're gonna in the buyer consultation, we're gonna show you how to build your team. We're gonna show you how to access the multiple listing service and off-market properties so you have more leverage. How to work with your lenders to get the best interest rates and find a strong lender that'll protect you in the process, and how to put together a total strategic plan so that you and your family are protected as you go through this market, because it's a crazy market. On the seller side, if you're thinking about selling, give us a call. We'll happily come by. We'll do a walkthrough of the house. We'll give you a market impact report showing what the market is doing to your personal value. It's not going to just be a CMA where you compare it to the other.
Like a whole region.
Right.
It's
your particular value. We'll give you staging options, and we'll also tell you what you can do to prepare the property for market, because a lot of people spend a lot of money on a lot of things that give them no return.
And we'll let you know what we pay for out of our pockets if you list with us.
That's right.
And like you said, the goal isn't, our goal is to have you list with us, but it's not like we're going to squirrel away this information only for people who buy with us. The idea is that everyone is protected, everything is a win-win, and you work with people who make you feel like you can achieve that.
That's right. Okay. All right. If you need anything from us, let us know. If you happen to know anybody looking to buy, sell, or invest in real estate, please have them give us a call. The number is 703-783-2143. Got anything else?
No.
Okay. All right. We're out. See you guys next week.
Bye. Hey, everybody. It is time for our Mortgage Minute with Tatiana Lopez from Prosperity Home Mortgage. Hello.
Hey, Tatiana.
Happy spring.
Happy spring.
Happy spring.
So happy. We made it.
It was a rough winter. We had 3 or 4 good snowstorms. It was.
Yeah, but they were pretty ones.
Yeah, it was. I call it rough. I liked it.
Yeah.
Yeah. It's a nice change from Florida.
I was happy, but I'm done.
Yeah. It's
over
time. Yep, absolutely. Yeah. So what's going on? We haven't seen you for a couple of weeks. What's going on with the market?
What's going on? Nothing is going on really. As you can see here, rates are 6.82. They're pretty flat, comparing to last week, which we skipped, right? So not much is going on. So Fed did not do anything with rates as expected. The economy has some mixed signs. The projection for GDP growth in 2025 is 1.7%, which is down 0.4% from the last projection in December of 2024. So, and in the meantime, the inflation is expected to remain at 2.7% this year and fall to 2.2% next year. The big question is whether the prospective drop in inflation will happen in the economy, reaction to Trump's tariffs, or which typically cause higher prices initially, right? So we'll see what happens, and the unemployment rate has stabilized and at a lower level in recent months. Um, uh, and the labor market conditions remain solid. Inflation remains somewhat elevated, but it's down significantly from 2022 when it was around 8%. So initial reaction of the market on Fed not touching the rates was positive. So the rates, they're just like I said, they're flat. They're moving up and down a little bit, but in general, not much is going on. Jumbos are again a little bit better than conforming loans at 6.67. FHA government loans, they're always better. They're lowest at 6.48. Again, this is average rate, but to understand this chart, the average means the rates that were locked, right? So, and in some they're higher, some are lower, and also they could involve points. I quote people at 6.75 on conventional in some instances, on government loans, even very like low six, like 6.125, 6.25. It all depends on, there's a lot of factors involved in interest rates. So don't look at this rate and think that, okay, 6.82 is the rate that I'm gonna get quoted. It all depends on situation. It might be higher, it might be lower, it might be right at 6.82.
Yeah.
Yeah.
Yeah. It's so hard to present rates when it is so variable based on like so many different factors. It's kind of it almost kind of makes you want to not put them out there, but everybody wants it and other people are putting it, so you have to put something, you know?
It's like when somebody calls and says, what can you sell my house for? It's like, I don't know, I haven't seen the inside of it.
Yeah.
If I tell you what it should go for, what a range will be, I haven't seen what you've done to it.
Yeah.
Exactly. It's, and again, if you're shopping for the rate, first you want to compare the rate and lender fees. Don't look at the bottom line of all other fees, because most of the fees that you pay at the settlement are third-party fees, not lender fees, right? Title companies, taxes. But what you need to do when you compare lenders, you look at their lender fees. And also, if you just call and say, what rate you can offer to me, it's actually not, you're not gonna get a very good and accurate quote, because the best is to do a loan application, because just like I said, there's a lot of factors that play into the quote. I don't like quoting people just on the phone, because sometimes I do when I do the pre-approval for them, I can give them something better than what I quoted them just over the phone without even knowing what's going on, because people give me their information, but it's not necessarily as accurate, like the same information that we would use. For example, first-time home buyers, in general, they get discounted rates comparing to not the first-time buyers. But there's also a income limit. So if they give me income, it's a couple, right? And they give me income that exceeds the limit, there's no positive adjustment to the rate. The rates will be higher. when I do the loan application, what I do, I look, do I need that second person's income? Maybe I can use only one income. Maybe I can qualify them only on one income, or they might give me income altogether with bonuses, overtimes, and maybe I don't even need that. Maybe they qualify just with base. But when I initially just talk on the phone with them, I'm using numbers they given me, it might be something, I give them higher quota that I can actually give them.
Yeah. Yeah, that's a good point. It's something people don't understand.
Yeah.
They think it's kind of like I could go to this grocery store and get everything at normal price and all the bags and everything, the packaging is free, or I can go to this one where everything is 20% off, but it's like, oh yeah, but they charge it like a surcharge. They charge $20 to park for the first hour. It's like you don't ever know all the other fees that go into
automatically to the cashier. Little bitterness.
Yeah, there are things that go into everything.
That's right.
So,
That's right.
Yeah.
I love your comparisons, Kelly. You're also creative.
Can you imagine arguing with this? she comes up with some great analogies. I'm like, okay, you win.
Just because he's tired of listening to me.
Do you still try to argue with her? Come on, Sean.
I know, I don't try. Like, she comes at me and I'm like, okay, I got to participate now. There's no escaping.
Then who am I going to argue?
I learned 20 years ago to stop doing that. Oh my gosh. Okay, so that's where we are with rates.
Yeah.
All right, so do you have any surprises, any new information for us on for this week?
I do. I have a surprise topic for you, which
All
you're
right,
not
yay.
aware of. But so we at Prosperity, we have a bunch of outside the box kind of programs, right? Of course, we do conventional loans, government programs, jumbos, but those we call it non-QM, not credit, not qualified mortgage type of outside the box programs we have, no income verification or bank statement loans, which, I'll talk in the future. But today, I would like to present you with our graduate program.
Ooh.
And so this program is designed for newly graduated professionals, like, in medical field, legal field attorneys, engineering, architecture, accounting field, even if they haven't started the jobs yet, and we still can use their income. We can use their future income from a fully executed employment contract if they have job offer letter. That's what we will use. So, if they were just in school, they just graduated, they passed the bar, they haven't, worked in the field, right? And they just get in this job, they're not gonna even start until after the settlement. We still can use, that job offer and that letter, that income on the job offer letter to qualify them. The minimum required loan amount is 150,000, maximum is 1.5.
Okay.
The minimum down payment is 10%.
Okay.
Interest only options are available too. 30-year, and we can even stretch it to 40-year amortization.
Wow.
Debt to income ratio allowed is up to 50%, which is wonderful, because typically, when it's outside the box programs, they're being a little bit more strict on things like debt to income ratio, right? And they would go to 43%. So here we can do 50%. And for those who doesn't know what debt to income ratio means, it's the number that we always look at when we qualifying you for certain loan amount, right? So we look at your income versus your monthly expenses, like your student loans, credit card payments, and future mortgage payments. So they cannot exceed 50% of your future gross income. The credit score is as low as 720 is allowed. Primary residence only. ARMs, adjustable rate mortgages, are available. No mortgage insurance is required. This is a big one. When you put less than 20% down, there's typically a mortgage insurance. With this program, there's no mortgage insurance. So we designed it, to make it to make the payment as low and affordable as possible. It's for purchase or refinance. Non-warrantable condo, this bullet point right here. That's in case if someone is purchasing a condominium and the condo does not meet the Fannie Mae requirements. There is option, possibility of getting it through with this program. So yeah.
That's amazing.
So is there a deadline or a time after they graduate, a time limit for how long from graduation to applying for this loan? So for example, let's say you have a child who graduated from engineering school and decided to go and explore national parks for 6 months to a year, and then decided they were going to go into their field. Would they be able to apply if they came back within a year and then got this government offer or this contract and everything?
Oh no, of course there's going to be a deadline when the year is not gonna. It's a little bit too much, but it's typically 3 to 4 months. We need to double check on also on the letter. It could be case by case. Just need to talk to clients about that and see what's going on. Also, they would probably would want to see some extra assets available as a reserve during the period they haven't started working yet, but they already have a mortgage payment, so they would have money to cover.
So not on the back end, not like, okay, so they graduate and then they're a week out of school, they apply and they're not going to get a job for 3 to 6 months. No, I'm saying if they took 3 to 6 months off and now they're going and getting the job, they have the offer. Would they be able to come in and utilize this program?
Well, so yeah, if it just there's a couple of months gap, it's fine. Again, those are non-QM type of programs. It's case by case. It depends on how strong the file is. They took a whole year off. We just really need to see if that's gonna be something that investors accept or not.
Maybe you could knock him in the head and be like, "What in the?"
Yeah, not that we know anybody that. Hopefully, he's not watching this. If we did know him,
But send me a copy of this because I have someone that I might want to forward this to.
Yeah, we might want to send this to somebody that we know.
Definitely. Send them this video.
This is
I'm not gonna give him the video. He'd be like, "Love you on video." All right. Okay, well, this is a great program. It's good to know this. Now, this is different than the doctor 0% loan and everything, obviously, because there's 10% required down.
And this included other professionals too. That's really great.
Exactly.
I like
so
that.
This one is a little bit different.
Can they get a second for the 10% down?
No, well, so this is maximum is 10%. I mean, meaning maximum loan amount is 90%.
Okay.
Yeah. If they need to borrow money from somewhere for the down payment, again, that has to be an acceptable source. We need to see where they're getting money from. But if it cannot be a second mortgage, because then it's gonna be a second mortgage on the property, because that would be 100%.
Right.
Yeah.
Okay, and then it would still have to stay. The payments on that would have to stay under the DTI and.
And another thing, like if you thinking, okay, maybe they can do 20% first and then 10% second, but you need to remember that the second mortgage, they need to also qualify them and accept this scenario, right? And typically HELOC,
that's true.
Home equity lines of credit, they are more conservative than the first mortgages. Why? Because they're on the second position, and if the client defaults on the mortgage and they foreclose, the first mortgage will get paid first and the second will get whatever left over, right? And that's why they're more conservative, because they don't want this to happen and they want to minimize the chances of the default. That's another misconception of people that I see, that they think that, okay, if I can't get the first mortgage, maybe I can get the HELOC, but HELOC is actually even more conservative than the first mortgage. Yeah.
Right.
Got it.
Okay.
Okay.
All
Very
right.
good.
That's awesome. So if people want to get in touch with you, how do they do that?
They can call me at 571-245-3000. Or they can find me actually on the Facebook too, Tatiana Ivleva Lopez.
Oh, nice.
Very
Okay.
good.
All right. All right. We'll see you next in 2 weeks. We'll
Yes,
see you in 2 weeks
in
for
2
the
weeks.
mortgage minute.
Enjoy the spring.
Yes.
I'll try.
Bye.
Bye.